Hi everyone, this is Mia at Effortless Mortgage. So today we're going to talk about the question that's on every Canadian's mind, which is where is the housing market headed? Let's break it down. We're going to talk about three things today. Number one, how much has the interest rate changed and where is it going to go? And number two, how has the interest rate impacted the housing market? Last but not least, how does this impact you? Whether you're a homeowner who is wondering about your mortgage or you're just looking to get into the market. First of all, I want to take a look at some of the headlines you might have seen already. There's just so much misinformation out there, a lot of biased articles, right? The news headlines are written to catch eyeballs in a time like this. It really does very little other than creating fear and panic. So I'm going to take this one as an example. Here, Toronto housing crash up to 36% in some GTA suburbs since February 2022. Oh my God, 36%, it sounds just so very scary. So I think we can all agree is that we're definitely seeing a long-awaited and much welcomed correction of home prices, right? But it just really blows my mind that some of the news articles write outrageous, like poorly research headlines just to grab the reader's attention. Take a look at the data. Like they've actually picked out King City, that is a fairly small community in the north of Toronto, and is concentrated with fairly large luxury properties. So that is really not a very good example at all, right? So let's take a deeper look at how they arrived at the 36% decline, right? I pulled the sold data in King City in the last 30 days. There are literally 3 homes that got sold. A $3 million home, a $1.2 million townhouse, and a $700K condo. Great, we have all dwelling types here, one each, right? So how can you average 3 houses, first of all? Secondly, with luxury homes, each property is just so very different. With a 20 feet marble countertop and a very manicured garden, you sell for $100K or more when it comes to a luxury home. So how do you even average that with a condo apartment? Do not let these types of headlines cloud your judgment. This is why we go deeper on the data to uncover the truth, so you don't have to. To fully understand what is happening in the housing market and what will happen to the home prices, the first thing we're going to take a look at together, how much has the interest rate increased and how much more is it going to go up, right? So let's take a look at this Bank of Canada interest rate increase press release together. Overnight rate is now at 1.5%. This is overnight interest rate over the past 10 years. Up to March 2022, the overnight rate has been extremely low. It's 0.25%. We had 3 rate hikes, 0.25, 0.5, 0.5. So now the overnight rate is at 1.5%. A lot higher than before, but it happened back in 2017. The overnight rate was at 0.5%. It increased in early 2017 from 0.5% all the way to 1.75%. Mortgage rate and the interest rate from Bank of Canada, they go hand in hand. What follows the Bank of Canada rate most closely is the prime rate for variable mortgage. So for 5-year variable rate, it increased from about 1.4%. And some lender was offering 0.99% to today, we're looking at somewhere around 2.65%. And keep in mind, I'm quoting the insured mortgage and depends on whether it's insured or uninsured or refinance is a little bit different. And the 5-year fixed rates increased from 2.8% for insured mortgage to 4.39%. That's for most of the bank lenders. And for B lender mortgage rates, it actually went up by on average about 2% since March. The private mortgage rates also went up by 1%, particularly for both first and second mortgages, which is surprisingly not a lot. And nowadays, actually a lot of the B lender mortgage rates are quite close to privates, and that's why there's huge and growing demand for private mortgage. Where is the interest rate going? The consensus is that there's at least going to be another 3 rate hikes. There's going to be 6 in total. The key factors of whether there's going to be more rate hikes or not, but inflation and GDP growth would be the 2 major ones. If we go back to the Bank of Canada press release, with the core measures of inflation ranging between 3.2 and 5.1%, we think it's probably a little bit closer to 8%. They still think the economy is operating in excess of demand, showed that GDP growth of 3.1%, which is in line with the expectation. And really the target for them is to achieve a 2% inflation. As long as the inflation stays up, they will continue to hike the rates. That means by end of 2022, we're probably looking at the overnight rate at 2.25 to somewhere 3.25, 3.5% range. Many people want to draw a direct relationship between home prices and interest rates. It's really not that simple. What we're gonna take a look at next is what's happening in the housing market. How has the interest rate increase and how will this impact home prices? All else being equal, the higher the interest rate, the higher the mortgage rate, the more unaffordable the homes are, then less people are buying it and the prices will fall. However, if you look at the historic data, this is really kind of plotting out the relationship between interest rate and housing prices. So look at this number here. The correlation is 0.165759. So anything less than 0.7 is considered a pretty weak correlation. 0.16, like, is there a relationship there? Maybe not. It really depends also on the wage growth, GDP number, inflation, and really the overall supply-demand situation in the housing market. Let's really take a look at markets across Canada. I'm going to focus on Ontario here because most of our clients are in Ontario, but we do have a pretty significant clientele in Western Canada and the Maritimes, right? So I'm going to pick a couple cities. So I'm just pulling up the CREA website. That's a Canadian Real Estate Association website. I selected Barrie, Ontario, Calgary from Western Canada, GTA, Kitchener-Waterloo area, Ottawa, and then Windsor. I'm not going to select too much because otherwise it becomes really hard to see on the chart. Now I have adjusted the time period to the past 5 years just because we've seen a very similar, environment back in 2017. So I just want to compare. Home prices have definitely corrected quite a bit. However, it really depends on where you are, right? So if you're in kind of London, Waterloo, or even north of Toronto, it corrected by a little bit over 10%. For GTA, it's about 5% from the March, and I'm talking about from the March highs, right? But if you look at this one versus a year ago, prices are still up. This is Windsor. It hasn't dropped yet. In Ottawa, just started to kind of soften. Calgary, it's flat, right? In fact, we're actually seeing quite a bit of buyers kind of looking to move to Calgary or invest in Calgary just because it's still very affordable. So the question is, where will the prices go from here? Will they continue to fall, or will they behave like what we have seen back in 2017? Like prices fall for about 2 quarters and then it remained flat for a few years before it really took off. But let's take a look at the top 3 reasons why home prices will continue to fall versus the top 3 reasons why this home price correction may be very short-lived. The number 1 reason prices might continue to fall is that higher mortgage payment and inflation makes owning a house much, much more expensive. Reason number 2, so prices have gone up by 40 to 70% since the start of the pandemic. This is really not sustainable. Just like stock market, the housing market is cyclical. We'll likely see a calmer market. There's not going to be as many bidding wars. The 3rd reason, homes are already so expensive. Interest rates are high, mortgage payments are high. The investors and speculators they may hold off from buying more real estate because of the higher cost. Higher cost means lower return, makes this investment less attractive. Now let's take a look at the reasons why the home prices may remain strong. The correction may be very short-lived. Number one reason is that rent is expensive and it will continue to increase. So let's just take a look at the kind of rental data here. Right, this is as of May. Vancouver year-over-year rent prices went up 24.1%, Toronto 21.5%, Oakville 9%, Burlington 13.3%, Kitchener 23.7%, probably because a lot of the kind of university students are returning. London 25%. So look at all those increases. It are likely to continue due to the inflation and lack of rental units across major cities. There's a major shortage. The alternative of owning a house versus which is renting is really not that cheap. If you think a 10% increase in your monthly mortgage payment seems high, look at those numbers. So number two, there is a lack of inventory and housing supply from years and years of underbuilding and the increasingly higher cost to build housing units, especially high rises, right? So the supply of Canadian housing market remains extremely tight. We just don't see a lot of inventory and takes longer and longer to build. It's very costly to build. If I were a developer, I would think twice before I start a new project. Last but not least, in a time like this, historically, real estate is still a better investment than stocks during high inflation time period. The stock market has been really bleeding red since April, especially the tech stocks. But let's not even get started with crypto and other investments. And real estate remains a relatively safe and stable asset class. As to which direction the prices will actually go, I guess we will find out soon enough. Let's take a look how your mortgage may be impacted. If you have locked into a fixed rate, whether it's 2-year, 4-year, or 5-year, your mortgage payment is not going to be impacted because it's fixed. 3/4 of Canadians are in a fixed rate versus 20% are in a variable rate, right? If you're looking to renewal, then your mortgage payment will go up. So let's say you bought a house for $620,000 in 2021, and after the down payment of $120,000, you borrowed $500,000 mortgage. So if you got a 5-year fixed rate at 2.99 at that time, assume a 25-year amortization, your monthly payment would have been $2,668 a month. In 2022, you bought another house, same down payment, same mortgage amount, but the interest rate is now 4.99. Your monthly payment would have been $2,920. So it's about $552 difference, right, for this $500K mortgage. So at a high level, it's every time mortgage rate increased by 1%, for every 100K, you're paying about $55 more. Many people may ask whether such an increase will lead to a sellout. Our view is the same as most of the economists. There's more likely a correction in the housing market, not a meltdown. The 2% increase we're already seeing, that's already been priced in to the mortgage rate through the stress test, because currently when we qualify someone, we have to add that 2% to their mortgage rate. So that's the qualifying rate they introduced in 2018. So to sum things up, right, Bank of Canada interest rate has increased by 1.25% since March 2020 and will likely see another 1.5% increase by the end of the year. So higher mortgage rate combined with market cycles has definitely led to some long-awaited corrections in home prices. However, average home prices remain pretty elevated. We can all agree that there has been some softening in the housing market. It is really hard to say which direction the prices will go from here, given the high rent, right? Inflation and also uncertainties in the housing market. As to how the mortgage payments are being impacted by these rate changes, 3/4 of Canadians are locked into a fixed rate mortgage,
and therefore will likely be able to ride out the wave of interest rate hikes. For those who are renewing or thinking about refinancing, your rate will go up. So that's why it is very, very important to talk to an experienced mortgage broker to ensure you get the best products that can help you save money in the long run.